Hello traders, Gary Wagner here just after 7 o'clock in Honolulu, 1 o'clock in New York on Thursday, 7th day of April 2015, and this is the daily report for gold and silver. We do have the precious metals trading lower across the board, of substantial pressure right now in gold, trading off approximately $9 at 1181.20. That is with a high of 92 and a low of 77.90. Spot gold trading roughly the same, 1182. And silver trading under pressure off about 1.31% or 21 cents, 16.29 on the day with a low of 16 and a high of 55. So I want to look at the gold market first through a couple of different types of studies and time frames. This is a very, very short-term study, 240 minutes or 4 hours. It is in Japanese average format. We have our MACD and we also have momentum. You can see that we've definitely, very, very short-term, we have absolutely gone red as the market broke below 1200, moving to about 1183, currently trading, as I said, at about 1180. But you can see these candles right in here. The body size is not that big. They're not small like you get right at the beginning of this corrective period right here. Look at these very, very small candles, but they're not large when you compare them or look at the type of candles we got as the market sold off here and went to these lows at around 1170. We are seeing the MACD, that is crossing on a short-term basis. But the key about this market and what has really caused me to be hesitant about taking any kind of a stab, and you know it for the last couple of weeks, is that we're still in this muck or defined range. And that really becomes evident, of course, when you look at our daily chart. That's what we're looking at right now. So on the week, we're pretty much unchanged for the week, but we've got these sets of lows at around 72. We came close to it. You can see today we came just shy of that. And my sense is, unless we see this market really break below this point, in other words, if we're still going to continue to just trade within this range, it's a different type of trading style that we would need to incorporate into our methodology, but we want to see if any kind of trend does want to develop. Up till now, over these last couple of weeks, there's no doubt there has not been. So we're looking at a daily chart. This is in our Japanese average format, and you can really see when we take a look at it through the eyes of a Japanese average chart, the alternating candle color and thereby market consolidation or defined trading range. As for some of the other markets that we are watching, crude oil did break back below $60 per barrel. It is trading lower. This is daily chart. You can see that red candle. But I also draw your attention to these channel lines that we have in. And even with the market trading lower, we have had this dramatic rise ever since it hit this low at around 41, and as long as it remains in the channel absolutely has an upward slope. But I believe at around 65, 66, we should see this market top out if we're not seeing signs of it already. Interesting day with the dollar. Now, the dollar is much stronger today, and that's after falling from this high at 100. We've got this double top here. Marcus has been genuinely trading lower, but traders, I draw your attention to these series of lows that we have right in here. 94, that was the area before that we were looking at to see if it would find some support, and we are just at this area right now. So on a daily chart, we certainly want to see if this area holds. However, the market looks much different when we look at some different time cycles. When we look at our weekly chart, and that's what we have up right now, the one thing that you notice is that on the week, this is that low of 94. It's come up substantially off of that low, and this is the area that we want to see if there is some support. But in terms of the week itself, it is getting back a lot of the losses that we've seen throughout this week. So we are now looking at a weekly chart, although this weekly chart is in Japanese average format, so it does smooth it out a bit. I've also got a basic fib retracement, and so the area of 95, this is a fairly important number. That's a 23% retracement. That's a retracement, of course, from this rally down to here. After that, you'd have to look at the 38% retracement level if we see the dollar continue to drop. Really, it on a technical basis will not find solid support until about 9,200 right in here. Interestingly enough, even with today's downside move, we're looking at a weekly chart of silver. And so we have had, this is our second week, this being Thursday, of course, that we have seen this market move higher. However, if we take a look at these series of lows and look at this as our lower level support, and then we also tag these tops or these highs up here for our upper level resistance, we are getting a narrowing of range. And that narrowing of range, of course, I believe is creating a compression triangle close to the apex, and I believe once we do hit the apex, we should see some energy released. We pointed out the same type of a pattern in gold the other day, so I think that we're approaching a point where we're going to really see this market break outside of this range. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for the weekly wrap-up and review. Bye-bye.